Good morning and welcome to Kramer's Corner with daily technical update. It is Tuesday, the 19th of August, and as usual, this video is for educational purpose only. There's no recommendation or advice whatsoever intended. So it has been a fairly quiet day on the financial markets the past 24 hours, and actually to start to the week. But a little bit has been going on. We have Meta platforms that sat back yesterday. Of the big ones, it was the one that moved the most, 2.3% lower. Support here 745, sorry, and down to the gap here. And what we can do, we can add that gap area, and we're using closing prices or opening prices. We're putting body gap 720. So let's see, there is divergence on the RSI, indicating that we are a bit stressed on the Meta here, but the trend is still bullish as long as we stay above 745. If it closes this gap down here, well, then we have a completely different situation. Also worth to mention, Microsoft testing support here yesterday, 515.5. The tested yesterday still stays as well, but if it closes below, well, then we could see it establishing a bearish trend. So keep an eye on that. If it moves back above the rising trend line there, then well, then the upside could resume. But this bearish candle here is really an obstacle for a really full throttle bullish trend to be established. On the overall index, Nasdaq just unchanged yesterday, but we are a bit stressed. As you can see, our side, the strength indicator is declining, the value is declining, market moves higher, so we are a bit stressed or in exhaustion mode here, for it to resume uptrend or keep it uptrend, it needs to take out the all-time highs there. I think we could see it sliding lower here in the coming days. So be a little bit cautious if you establish a new position. We can see here also on the US Nasdaq 100 CFD, more or less based on the future. We have this top and reversal like pattern in place here. Divergence on the RSI indicating a likely lower level. So if we're just quickly looking at the S&P500 cash index, we can see, well, it was basically also unchanged yesterday. Above a minor support there, 6,427. Key strong support 6,200. If it starts moving below the 6,427, then we could be in for a little bit of a correction. On the Dow Jones, yeah, also more or less unchanged, as you can see, basically unchanged there. But yeah, the day before, well, on Friday, it actually closed also again below the resistance there at 45,060. So a little bit of be cautious here. It seems quite toppish at the moment. Looking to the to Asian market, we have Seng keeps sliding lower, could test the lower rising trend line here. Has closed this gap down to this candle there, just above it actually. Let's have a look very quickly. Seems we're just above it, testing in minor support there, could bounce. So still in a bullish trend, but it seems to be struggling. Let's have a look at the weekly just very quickly. We see stalling a little bit. So we have divergence here on the weekly. You can see RSI values declining where market moved higher. So be cautious also there on the Hang Seng, unless it bounces from current levels, then I think we could see it sliding lower. On the Nikkei, here's the future, spiked higher this morning, just below the 44,000. Looks also a little bit toppish. We can see RSI declining there, and market moved higher, so we could be in for a toppish behavior. But let's keep an eye on the 42,520 support. That would be key for a larger correction. In the European market, excuse me, EuroStoxx50 that got rejected at the strong resistance here at 5,467. Set back a little bit yesterday pre-market, indicating unchanged, but I think we could see a setback down to 5,350 area, unless it closes above this resistance there. We can see here pre-market basically unchanged. DAX, well, flirting with the falling trend line. You see the open above yesterday. Sorry, Friday, not yesterday. Yesterday was that little dot there. So basically also just a little bit lower. So really needs to take that one out. I think I will move that one up here. You can actually have both, say it needs to close above that level, but definitely also this level here, and we have this bearish candle here that looks very choppy. And RSI got rejected at 40 threshold, 60 threshold, and so we are technically still in a bearish sentiment after closing below there. So it is key that RSI will close above 60 threshold to establish a bullish trend. Moving on to the FX market, 117 on euro dollar is really key. It has been proven 1, 2, 3, 4 days in a row, basically also 5 or 6 days here. So 117 really is key. Yes, it has spiked above a couple of times, but it hasn't really broken away from it. And RSI still in a negative sentiment, hasn't closed above 60 threshold. That is really key also to do for euro dollar to push higher. So it seems like if it really takes off, and I think it does that, if it takes out the spike up there 1730, then it will, I think it will take off towards 119. But for now it's in the waiting position. Sterling dollar, or cable as we call it, rejected here just below the 136. Resistance sitting back a little bit. Maybe it will have another go. Positive sentiment on the RSI, but just slightly. Could be it could have another go, but if it takes out, I think if it takes out the lows today, then we'll think we will see it sliding back to 134, 15, 20, maybe even down here to 134. On the euro sterling in bouncing mode still, but can't really get traction. However, we're still positive sentiment despite the fact that there is some divergence on the RSI. If it takes out the lows here and closes below, then RSI is likely to close below 40 threshold, meaning then we will be in negative sentiment. But for now, I think we could bounce a little bit further. And if it does move back above these levels here at 86.55, then I think we could see it bouncing up to 86.85, possibly higher. But in the broader picture, we could be range bound in this wide range here for quite some time. On the yen pairs and dollar yen, well, not really much either. 148.50 and a change, 148.55 needs to take that out to really establish that bullish trend. But for now, it could look like a shoulder, head, and shoulder-like pattern with a neckline down here. It's not the most perfect one, but if it takes out the lows there and the rising trend line there, then I think we could see it push lower towards 145. But the 55 moving average is kind of boxing it in there and between the 200. So I think we'll be range bound here for some time. It needs a trigger for a move. Euro yen also stepping sideways. So between 173 and a little bit, you see here 173 or 3. So if it takes that spike up there, then I think it will also take out the peak there and likely to push towards and above 175. That little spike down there, if it takes out that, well, then we're looking at 169.70, which is the key strong support that could be tested. But 55 moving average coming up, adding to the underlying bullish trend. So keep an eye on those two range levels there. Aussie yen, more or less the same picture really. 96.85. to the upside, and a strong resistance here at 97.30.35 should be observed, and key strong support down here at 94.80. You can see how it tested this 95.5 level here a couple of times. Could slide lower towards this. We have the 200 trying to drag lower, but the 55 moving average giving it some bullish support. So also range bound there, waiting, sitting in waiting position. Sterling yen, same picture, more or less rejected there at the 200, spiked above a couple of times. I did expect a little bit of a setback, at least down to 198 and a quarter, possibly down to 197. But if it takes out the peak there, then I think we'll see a push up towards 202. I don't think I would sit and wait around for a close, but that's depending on your trading style. Bullish sentiment or positive sentiment on the RSI, indicating we are likely to push higher on sterling yen. Aussie dollar slowly sliding lower, currently around the 61.8 retracement at 64.75. Testing that at the moment. Negative sentiment tells me, well, we could see it sliding lower to at least 786 retracement at 64.50, and possibly testing the rising trend line there. If it's it moves back above 65 and takes out this peak here, well, then there's room up to 66.80. Sterling Canada, let's just resize that a little bit and zoom in. Well, the 61.8 retracement there, 138.19 seems to be the key. If it takes out the spike up there yesterday, 138.32, I think we'll see it pushing higher. RSI is telling us we could see that with the RSI, the strength indicator in a positive sentiment, no divergence, indicating slightly high levels, despite the fact that the 100 moving average trying to push it lower, but 55 turnaround. So I think we will see a push higher here in the coming days and weeks. But let's see. Support here 137.20. Sterling Canada, massive volatility on this one. I think we could see a setback to the 38.2 retracement at 185.5, and then a bounce. However, if it takes out the peak there, well, then there's potential towards 189, 190. EuroSwiss struggling with the 94.50 resistance. That's why I have added a Fibonacci retracement to it. I think we could see it sitting back to 93.80, possibly down to actually the 50%, where we have all the moving averages, more or less at least, giving some support. Here we have the 200 giving some support. Here we have the 55 and the 21 giving some support, and the cloud support. So let's see about, I think we will slide back. But if it takes out the peak here from yesterday, then there's room up to around 94, 90 and 95. Dollar Swiss forming possibly, and if I zoomed in on intraday and hour chart or 4-hour chart, I could see that it's forming this triangle-like pattern here that it needs to break out of a direction, but key support here at 80. That should be observed. That could be key. If it takes out that, well, then I think we'll slide lower and take out the lows there. If it breaks above the falling trend line, there could be room up to, and also take out this, there could be room up to 82, 82.5. On the dollar index, well, excuse me, the 97.45 support area here, that is key, which is also around the 786 retracement you see of this uptrend here, where it bounced a little bit from, found some support, but resistance here 98.50. It needs to take out that for a bullish move higher. Positive sentiment on the RSI telling us it could occur, but for now it is really not doing anything. So it's like in a wait and see mode at the moment. Gold. Finding support there at the 61.8 retracement of 3,322. That is hovering above. Still positive sentiment on the RSI, indicating we could push higher, but it seems very fragile because we actually have divergence all the way back, going back here. and we could basically just be sideways trading in a bigger range between the 3,245, which is the key support, key strong support, and the 3,400 for 3,410, 3,440 up here. So in the bigger picture, we are a bit range bound to say the least. Wait and see mode. I have a hard time finding the direction, so I would stay on the sideline a little bit to see which way we are moving. If it takes out the peak here at 3,410, then I think the push towards 3,500 is in the cards. The silver spot that actually did close above the resistance there, but couldn't hold on. It didn't even get up to very close to, though, at the 786 retracement. So it's range bound there. Key support 37 and a half. That should be observed. On the platinum, well, it bounced to 50%, same story as yesterday, sliding a little bit back. And what will it do? Will it slide back further? So needs to take out the spike up there at 1,372 for really a bullish push. If you're a short-term trader, you can add this one. It's taking about 50% of this uptrend again. So sliding back seems to be in the cards for a little bit longer. Copper, I'm not going to say much about, still range bound here in a tighter and tighter range. Seems like there's no interest, so but keep an eye on it. Suddenly it will move. The energy markets and WTI crude oil still bearish, could take out the lows there. Then I think we'll be looking at $60. And the same on Brent crude oil, 65 down to 62.50. The European nat gas seems to maybe pausing a little bit, but we are in a bearish trend. Could take it down to below 30 euros, possibly down to 29. But looks a little bit exhaustive. But the trend is your friend for now. The US nat gas that has bounced off the support here at 276 could bounce up to maybe $3, but I'm not quite sure it will do that. But there is potential to it. If it takes out the lows there, then we'll look into 56. Moving on to the interest rates and US 10-year Treasury yield resistance there at the 100 moving average, and the 50% of the downtrend there. Also the 55 moving average putting a lid on. So it seems like it's really struggling for upside, and we should be happy around. We don't like too much of high interest rates. So 420 key support, but if it starts moving up here, key resistance 440. On the European yields, we have the EU 10-year pausing a little bit, but in a bullish trend with higher lows, as you can see here, and higher highs. And I think we'll see it eventually pushing towards 283, possibly higher, towards the 161.8 of the last correction there. UK 10-year moving higher also this morning here. It actually yesterday spiked almost up to the 138.2 projection of this correction here, and we are in a bullish trend, and I think we'll see it pushing higher towards 480, which is 161.8 projection. So rising UK rates is in play here. The Bitcoin currently at the 786 retracement here at 14,682. Key strong support here at 112 could be tested. And let's see if it bounces back and gets back above 118, then I think uptrend could resume. Ethereum flirting with the 38.2 retracement at 4,242. Up basically a little bit below it, could slide further. Key strong support here around 3,940 and the 61.8 retracement just above 3,900 could be tested, and then I think we could see it bouncing. But we have RSI divergence. The RSI values decline when the market will higher, so it actually indicated exhaustion mode. All right, that's all for today. Have a nice day, and talk to you again later.